Hi there. It is a miserable, wet, gloomy Thursday afternoon. So instead of our usual talk on a walk, we're sat in the back of the car waiting for the rain to pass. Aren't we, Harry? Yes. In the last video, we talked about the mess that is the UK tax system, how it came to be such a mess, how it compares to other industrial nations, and how much it's costing the UK. And for this video, I'm going to talk about what the solutions are, what a good tax system looks like, and why. So first of all, if you're hoping that this means that I'm going to tell you how we tax the rich buggers or how we are going to lower everyone's tax burden, then you're out of luck. That's not the purpose of the video. This is about creating a tax system that is simple, doesn't distort the economy, and still allows for political decisions as to who gets taxed how much. That said, there are some fundamental principles any such system needs to follow. Number one, the system should not distort decision making. You want the decisions people make, the decisions companies make, to be as close as the decision they would have made without a tax system than with one. That way you get the maximum optimized economic output and the strongest GDP growth. Number two, it should be transparent and simple. If it requires a tax accountant to explain it to you, it's too complex. Number three, it should be broad-based. What do I mean by that? Well, basically, everyone should pay some tax. Now, I realise this might be quite controversial, particularly as the direction of travel over the last sort of 10, 15 years has to raise as many people as possible out of paying tax if they're low earners, which I totally get. We don't want to put any more burden on people who are already struggling with costs. However, doing so comes with a political cost. What am I talking about? It's the civil engagement of individuals. Now, we only really engage with the civil entities, the civil structures, once every 5 years in an election, and in two other ways. The first is when we pay tax, and the second is when we consume services. So things like the police, ambulance, and so on, or welfare. If you raise people out of paying tax, then their only real engagement is when they consume services. And that means they have no incentive to care about how those taxes are spent, how efficiently they're spent, the priorities on spending. All they really are incentivized to care about is whether or not the services they consume are there for them, not how efficiently they are consumed. So when I hear a politician say we want to raise the tax thresholds or take more and more people out of paying tax, I don't think, what a nice person. I think, there goes a politician who doesn't want their supporters to hold them accountable for their economic wisdom or their economic competence. Doesn't mean they have to pay a lot, just enough to pay attention and then query the politicians to make them be as competent as possible. So that said, what does a good tax system look like? So let's start with probably the main tax for us, which is the income tax. At the moment, it is full of cliff edges. So if you look to the graph, you'll see that you pay nothing until about 12.5, then you pay 20, then nothing to nearly 50, then you pay some more, and then 100. Some weird things happen when you lose your personal allowance, and then for 125 onwards, it's a bit lower. That is a very strange system full of cliff edges. What happens is, as people approach cliff edges, their behavior changes. Very often, if someone is close to a cliff edge and they say have the option for a promotion, they will look at that and they say, well, I may get 10 grand more, but I get to keep a lot less of it for more stress, more hours, maybe more time away from my family than I do now, so why bother? You distort the decisions. When you get to 100 and you lose the personal allowance, then the marginal tax rate is ridiculously high. And if you think that marginal tax is a good idea, well, it just doesn't work. So what we need to do is get rid of all those cliff edges while still allowing for a progressive tax system where those at the top pay less. And you do that with this graph. This shows a sinusoid curve whereby you only have to modify three things. Firstly, the lower rate. So what is the minimum tax that you pay on the first pound you earn? You then look at what's the maximum tax you pay, no matter how much you earn. So let's say, for instance, you decide the minimum rate is just 2%. So a nominal amount so everyone feels at least engaged with the tax system. and you set the upper rate to something really high, like 50%. And then the curve, that lazy S, has a midpoint, what we call the inflection point, where it's the maximum rate of increase. And all you have to do with this kind of tax system is to find three things: the bottom, the top, and the inflection. And as you can see, the higher up you go, the more you pay. And interestingly, that curve is not what you pay for your total tax, it's what you pay on each incremental pound you earn. So the money that you've earned up to that point, that's what you pay. And then the next pound you earn, the tax rate you pay is only a tiny, tiny, tiny bit more, and so on. So there are no cliff edges. The people who are well off, who earn more, pay more. And if you want them to pay more still, you just raise the upper level. Yes, everybody pays more, but the balance of the pressure, the balance of that cost falls on the higher earned. If you want to change the mix, you just move the inflection point. You move it closer to zero, and you end up with more people paying more, spreading that burden more. You move it further away from zero, and people to the left pay a little less, and the people to the right pay more. Those three things alone allow you to change the distribution completely, modify your total tax intake, but there are no cliff edges. There is nothing to specifically distort behavior. You notice that the top curve never quite reaches the maximum. It's asymptotic. It gets closer and closer and closer the more you earn, but never quite gets to it. And that is the basic principles. And all a chancellor needs to do is modify those three things, and they can do a hell of a lot in terms of raising income and modifying who pays for it. You can apply that same principle to corporate taxes if you wanted to. No cliff edges, nice and simple. You simply define what's the minimum tax that someone pays, what's the maximum, and what's the inflection point. There's no need then for these windfall taxes when somebody suddenly takes advantages of certain rules or what's happening in markets and there's a lot of money. They just move further up the curve and they pay the tax on it. It's self-managing in that respect. And it critically allows for political parties, if they want to have a tax and spend big government policy and they have a mandate for it, they can do it without changing the tax system. And it's very transparent. Everyone can see what a government's doing and who is bearing that burden. Whereas at the moment, lots of stealth taxes, it's never ever clear, it's just that people feel poor. And one of the other principles that I've got to mention is that success or personal growth should never feel like you're losing out. And with cliff edge taxes, it does. And with this system, it doesn't. The next thing to look at is VAT. Now, VAT creates this horrible cliff edge at the threshold where there's this bunching of small companies that earn just underneath it. So they're not growing, and that damages the economy. So how do you fix that? Some people say we'll just move the threshold. Well, you're just creating a cliff edge somewhere else. So what you do is you say that all company invoices must carry VAT right from the very first. But small companies get a rebate. And that rebate is tapered up to a point. There's no cliff edges. You get a smaller rebate the bigger you are, and you can set the zero amount at 100,000, 200,000, whatever you think is appropriate. But at the end of the year, you get a rebate based on the VAT you earned. Sorry, the VAT you paid relative to the size of your company. And that allows very, very small companies not to be burdened too much. And that makes it easier. And also, you need to make sure that VAT has no exceptions. We have a super complex list of exceptions in this country, such that whether you're selling hot food or cold food, whether a Jaffa cake's a cake or a biscuit, clothing, children's clothing exempt, adult clothing's not, which means a £3,000 coat for a child in Harrods is exempt from VAT. It's all ridiculous. And by having a wider base for VAT, you can actually bring the rate down, so that those people who are worried about the poor having to pay more on some things like children's clothes, or they're paying less than everything else. And also the income you bring in, you can also add to child allowance, which also covers it. It's very simple. We're the only country in the world that has such a complex VAT system. One quick thing, Harley here, say hello Harley, has a quick request. Would you mind hitting the like button and maybe subscribing? Most people who watch these videos don't, and it really, really helps. Okay, that's it, back to the video. The rain started coming down so hard we had to abandon filming because I couldn't hear myself think. So here we are, the day after the rain, and it stopped raining, but it's very cold. So Harley and I are continuing our discussion on what does an optimum tax system look like for the UK. We've already touched on income tax and VAT, so now I'm going to talk about property taxes, specifically stamp duty and council tax. And the solution is do away with both of them. Neither of them do us much good. The council tax is nowhere near wide enough in terms of its distribution of valuations and therefore what's paid. So people who have the most valuable homes do not pay their fair share, as the saying goes. And the stamp duty, which is a tax on transactions, really inhibits the market. It discourages house building, it stops people from moving, and it hurts everybody all the way through the chains, from the very largest houses down to the very smallest. What you do is replace all of that with a simple land/property tax. The valuations are done at least every 10 years, probably every 5 years. And again, it's not done on bands, it's done on a straight, simple curve. If you have bands, then there's an argument to be had every time you approach one. No, my house is not worth 2.1, it's only worth 1.9, which will lead to all sorts of legal challenges. But if it's a straightforward curve, be it sinusoidal like the one we discussed for income, or even just a straight line, then it will just do away with all that, much simpler, and culturally we'll get used to the idea that these are updated every few years to take into account changing market conditions. And if the value of your property or land should fall, you should pay less. And if it goes up, then you should pay more. Very simple. And next we come to capital allowances, the things we do to incentivize business, to encourage them to put their money in certain places. And these create all sorts of distortions. If these markets, if these industries, if these companies were worth investing in, they should be invested in anyway. They shouldn't need that kind of additional support. If you're worried about foreign competition or unfair competition and they need temporary support, well, that's a separate issue which we'll come on to in a second. But generally speaking, it's really not needed. And it creates all sorts of distortions, and people make decisions about where to invest, not about where the best return is, but where the most tax efficient place is. And that does not produce optimum economic output. If it's really felt that a particular industry needs support, we're going to create some sort of exemption from tax or some sort of tax incentive, then that's fine if it's democratically mandated, if it was in the manifesto, for instance. But it should come with two conditions. Number one, it should be time limited, 3, 4, 5 years. And secondly, it should be outcome limited. So if the desire is to, let's say, get 5 billion investment into a particular sector, then if that 5 billion is met and you've actually achieved that much investment, or you've hit the time limit, 3 years say, it automatically ends. That doesn't mean you can't extend it. If the government wants to say, do you know what, this is working fairly well, we want to do it for another 3 years, then you can do that, but it is transparent. And they have to make an active decision too, and we as the electorate can see it and go, yeah, we agree with it, or no, we don't. But these exceptions, once they're currently created, just sit there, clogging up the works and distorting decision making. So, okay, so you've got all these ideal tax positions in the UK, but you're probably thinking to yourself, well, if you do all these changes, aren't you going to create winners and losers? And you're absolutely right. That's kind of the point. We've had so many distortions for so long, people have made decisions not based on what's good for them neutrally, but what's based on tax. And if you get rid of all those drivers, those incentives, go to a more sensible system, then some people are going to lose out and some people are going to win. And as we all know, politicians hate creating losers, and winners never say thank you. So in the next video, I'm going to look at how we implement the system such that you can actually do these things. So long for now. Ta-da!